What's going on, everybody out there? Thanks for checking me out. Let's jump into it. Want to recap the broad markets for the week. All right, today was a rough close. Historically difficult week in the markets. Wall Street just finished its fifth straight losing week, you guys. The longest streak in nearly 4 years. This is extreme fear. This is the definition of extreme fear. All the major indices are down, you guys. But let's take a look at the SPY because we plan for this kind of action. Guys. So let's zoom out on the SPY. Let's go to our 3-year weekly chart. All right. That 650 level is a line in the sand, and you can tell from, make my cursor different here. You can tell this was our level of support, this 650 level, right? That was our line in the sand this week on SPY, and it just did not hold up. So in the short term, we were watching and eyeballing the failure of that 641 if 650 failed. So if we zoom in here a little bit, you guys, I'm going to tell you, or let's mark out 641 here, right? So this is my trading strategy, and this is how I like to trade. So failure retest or breakout retest is the strategy I like to use, right? Over the years, I feel like this has been the most successful trading strategy that I've had. So look at this failure. We failed 650. We retested it, failed to break back above it, or 641. I apologize. 641. Once we broke 650, break and retest, and we just go lower for the rest of the day. The same thing applies for the breakout. We break resistance, we pull back to confirm we're going to hold it, and we move higher. The entry level is usually over the pullback, right? Whereas if you look on the failure, breakdown, entry, and then you take that right all the way down. All right, so that was the move on the SPY today, you guys. The same thing applies for the Qs. The oil is what's really leading this market right now, you guys. Oil is really leading this market. So I'm trying to pick my spots around oil and what would be a nice play to make off of oil, since I missed the entries on oil. I don't like to take entries when the stock is too far away from the moving average. If you look here at XLE, this is the energy ETF, all right, but it's big for Exxon and Chevron and those gas stocks like that. But if you see the distance between this 20, right, that distance is too far for my liking. I don't like that. The 200-day moving average, look at the distance between the 200-day moving average. I stay away from those, right? The only way I would play this, I was looking here for a failure of 56, the retest for us to go lower, and the entry would have been there. So I'm still waiting for the pullback on oil, all right, or energy on oil. Yesterday, I highlighted USO. And it was a ripper today too. If you guys see the 200-day moving average, look at that distance on the 200-day moving average. Let's look at that distance. That is about 68%, guys. 68% away from the 200-day moving averages. That's just too far for me. So I just wait. I just keep the stock on watch, and I just wait for it to get back to a more comfortable level. So let's zoom in to our 10-day, 10-minute chart. Today, it just ripped, you guys. It just kept ripping all day. Broke the previous high, you guys. Nothing more to say. Oil is leading the markets right now, you guys. So let's check out these individual stocks that I have been talking about all week, right? In our weekly objective, right? Here we are. These are the plays that we watched all week. to avoid the fluff and the noise and all the stocks that are out there and that get brought up every day. Creating a plan for the week keeps you focused on the objectives. All right. So far, a few of these have hit. But let's check out today's price action, you guys, on CCL. So CCL had earnings. Earnings is a rough one to play, you guys. Earnings is a rough one to play. And all week I've been telling you guys that these guys have had record bookings, right? People are booking these cruises and they are looking good because they beat earnings the last 4 earnings reports. All right. So it was looking good for CCL. And all week, if we look from Monday this week, right, we've gone from 25 up to close to 27. So it's had a really nice move. Right. Let's see what that distance is. Right. So we had let me zoom out for a second so I can get that move. So we've had about a 12.5% move, a 12% move on the week right here between Monday and Wednesday on CCL. So it had a really nice rip pre-earnings. All right. And we were able to catch some of that on Tuesday into Wednesday. Right. But if we move back and talk about today, because today is what we were really watching. If we take a look at the Discord, right, the play of the day or the watch list here at 9:16, I said this level needs to hold that we were currently at. With a positive report, we could see a move over 25. All right, but I wasn't looking for this until around 10 o'clock. All right, till around 10 o'clock. Because if we look in the pre-market on CCL, we were unable to hold 25.13. I told you guys yesterday this was the level I wanted to see hold today, but we were unable to hold that level. So I wanted to see CCL break above it, pull back, and move higher. Let's take this to the 5-minute chart so we can see that pullback. So we'll go to the 5-minute chart here. All right. So unable to hold that 23 level in the pre-market. So we were watching the pre-market, and around 9, I told you guys we wanted this level to hold 24.61. And why? Let's zoom out for a second and see exactly why we needed that to hold. Pivot level. Resistance. So we were looking for it to be a level of support, 24.61, right? So I said this morning that level is what we needed to hold, and let's see what happened, you guys. So here we are at the open. We rip up in the open. We break that 25.13. We hit a high of 25.38. Here we are in that second 5 minutes. This is our tester. But you see that upper wick right there. That's not good. Sellers quickly just shoved this right back down. All right. So in my strategy, right, we would need this to pull back, hold, right, and then go higher. That's where I was looking for my entry around 25.25. That's where I told you guys earlier in the week was my go level on CCL. Today, however, quickly got flushed down, right, and then just kept dropping. 24.61. Once again, we failed that level, and look what happens. We retest that failure level, and we just skate down into the end of the day. So no good on CCL. We mapped out our levels, we mapped out our plan, and we didn't get caught in the earnings trap. Nevertheless, CCL, right, this, guys, despite the revenue beat of 6.2 billion, I'm liking this for next week because they just had $2.5 billion share buyback. They got record bookings. The stock closed down 1.75%, right? But the $500 million fuel headline is currently overshadowing the beat. All right. So we're looking for 25, 24 to hold. If 24 becomes the floor next week, we are going to look for our entry at these same levels. If we can get 24 to hold, guys, we still most likely will look for an entry over 25 to take this back up to $30. So we will be watching this next week. We'll put it on the back burner and we'll still be watching it. But this was the play on CCL today, you guys. Don't want to make this video too long. Yo, hit the comments, subscribe for the Sunday watch list for our new objectives for next week, you guys. Stay tuned. Join the Discord. It is free. Let's get this money, you guys, the smart way. All right, let's go.